Okay, today I'm going to talk about Airbnbs and how they work potentially very different from other long-term rentals and how it could actually potentially be a loophole for you to give you extra benefits tax-wise that you don't get from long-term rentals. So I'm going to cover three important things today. So I'm going to talk about one, what is deductible? Two, are they considered passive? And three, are they subject to self-employment tax? So first, let's talk about what's deductible. Here, there's not a lot of changes to long-term rentals for the most part. I mean, your property tax is still deductible, your interest expense is still deductible, any management fees. Of course, you get depreciation deductions, although the depreciable life may be a little different if it's an Airbnb. But the big change is it because you're furnishing an Airbnb that a lot of times you don't have for a long-term non-furnished rental. So the big thing here to pay attention to, one is that you have a special exemption which says if you buy personal property and it's $2,500 or less, you can write it off without having to depreciate it. So most of the time, the couches or the tables, things that you're putting up in the house, or a lot of times, or maybe you're buying board games or something like that, all that's considered personal property. And so if each individual item is less than $2,500, then you can just write it off. So that is the real difference between an Airbnb and a long-term rental when it comes to deductibility of expenses. So that's the easy part. Now let's get into the meat of it and let's talk about whether an Airbnb is considered passive. This is important because if an activity is considered passive, it means that it's not deductible unless you have other passive income. So if you have a loss that you generate, you can only offset other passive income from other activities. So generally speaking, you want things to be considered active so that you're not subject to that limitation. So that if you have, say, a regular full-time job, and then you also have an Airbnb on the side, if you have losses through depreciation and other things, or maybe because in the first year you just spent a lot of money furnishing it, so you front-loaded those expenses, you want to be able to deduct it. So it's really important to know whether it's passive or not. Generally speaking, rental activity is considered passive by default. So the real question becomes, what is a rental activity? And we have to look at how the IRS describes a rental activity. So of course, an Airbnb, you're renting it, but it's a short-term rental, right? So it's not really a question of how we think about it, it's how the IRS thinks about it. So the question becomes for Airbnbs, one, if it's 7 days or less, it doesn't matter if you're providing services or not, it's exempt from the definition. If your average stay is above 7 days and less than 30, then you have to determine whether you provide significant services. And really the determination of significant services is pretty facts and circumstances based. So I mean, basically you're just going above and beyond in providing certain things to the user that are not required of you. So of course you probably should provide heating and cooling, right? So that's not going to be considered a significant personal service. However, maybe you're providing cleaning every day or changing out towels, or maybe you're providing like a touring service or something that's like a package, like a vacation package along with the Airbnb in some way. So some of those things may or may not be considered personal services when you take everything into consideration. But for most Airbnbs, a lot of them, the average stay is going to be 7 days or less. So you don't really have to consider that. And then lastly, if you're providing extraordinary services, it doesn't matter what the stay is. Of course, this probably isn't going to apply to most Airbnbs because we're talking here more about like nursing homes, boarding schools, things like that, where most of the time Airbnbs are not considered passive because most of the time the stay is going to be less than 7 days, or it's going to be less than 30 days and there'll be some kind of service that's provided. So that's great news because now, unlike most long-term rentals, you can use that loss if you generate one to offset other income. So this is really a loophole that probably wasn't thought about because these rules, these passive activity loss rules, came about in the 80s and Airbnbs weren't a thing back then. So this is a really neat way to take advantage of the tax law and how it hasn't really been updated for the current environment, because if the Treasury knew about this back when they were writing the rules, they probably would have written them a little different. I don't know. So lastly, let's talk about self-employment tax and whether Airbnbs are subject to them, because this could be a good or a bad thing depending on where you fall. So generally for long-term rentals, you're exempt from self-employment tax. And self-employment tax is another 15.3% tax added onto your other income tax. So it can make a big difference. So on the Airbnb side, because it's not necessarily considered a rental, now you have to look at it and see whether it's self-employment income. So unlike the passive activity loss rules where you're trying to get out of the norm and escape the definition of rental property, when it comes to self-employment tax, you're now trying to fit into the definition of rental property. And luckily, the definition of a rental activity for self-employment purposes and passive activity loss purposes are different. Now, they may overlap a little, so we have to be careful, but technically they're different. So for self-employment tax, essentially it says rentals are excluded except for when services are rendered to occupants. And so what this basically says is if you're not just renting a room, so if or a house or whatever it may be, but instead you're adding on some other type of service, and you have someone to drive a shuttle around to different vineyards, and that's all packaged with your Airbnb, and so now you're providing another service. Well, depending on the extent of those services that you're providing, then you may now be subject to self-employment tax. So you have to be careful that you're giving people the experience, because that's a big part of what the Airbnb world is about, but that you're not giving them so much services that now you're subject to self-employment tax. Now, it's pretty gray in terms of when you cross that line. We don't have a lot of examples from the IRS, of course, because this is all relatively new and they don't release new rules just overnight. But we did have some guidance. The problem with the guidance that the IRS did give us is that it was two extreme examples where the question is, when do you cross the line? And what I've seen is most of the time that you're not subject to self-employment tax. Of course, it is facts and circumstances based, so the IRS may disagree. So key takeaways from all of this: what's deductible? Pretty much the same as a long-term rental, except that you may have a lot more expenses for furniture and things like that you can most of the time just write off right away. Secondly, that it's probably not considered a passive activity, especially if the length of stay is 7 days or less, which means you can use losses to offset your other income, unlike long-term rentals. And lastly, be careful about how much services you're providing as part of the Airbnb stay so that you can avoid paying another 15.3 self-employment tax.